Hello traders, Gary Wagner here, just about 10:20 in Honolulu, 4:20 in New York on Wednesday, 13th day of July, 2016, and we are looking at the Dow Jones Industrial Average for the second day in a row, going to new record historical highs, never have been here. Now today's rise only up about 24 points, 0.13%, about a tenth of a percent in terms of the gain, 18,372. Quite interesting. S&P also trading higher on the day. Let's take a look at the E-mini. That actually is unchanged, 2145.75. The low on the day is 2139 with a high of 2152. Interesting scenario in the equities market. Of course, on Monday, we had this market moving and actually saw the Standard & Poor's getting ready and actually trading to a new record or historical high. On yesterday's activity, we had the S&P go to a new record high, and the Dow Jones Industrial Average for the first time this year went to that new record high. That was yesterday. We're looking at a daily candle. And then, of course, on today's trading activity, it's a very, very small bodied candle. We'll have to enlarge this a little bit, but you can see effectively it opened and closed above the former record top. So we now have a new record or all-time high. You can see that right here. We are trading just above that. Now, we're well above, obviously, 250-day moving averages. So what we want to do at this point is to really plot where we think this market could go to. And to do that, we'll definitely want to take a look at the Standard & Poor's 500 vis-a-vis the E-mini. And that's just what we've done. We've pulled up the daily chart. And the only concern that I have when I look at this daily chart is we're in new record territory, 2146. The high today, 52. So we have kind of punched off the high. You can see that here. And what it is creating in terms of a candlestick is a pure doji, because we are absolutely unchanged, 2145.75, unchanged on the day. You have an open and a close that are identical. Now, dojis are absolutely fascinating candlestick types, and it's something that I believe that the Japanese were able to uncover in terms of pattern recognition that their counterpart, us Western traders, really didn't have something comparable to that. And that is the fact that what a doji illustrates better than any other candlestick type is that there is a constant battle between factions, those that believe something is undervalued and those that believe that it is overvalued, bulls and bears. And during that battle, the outcome of the battle is illustrated by the candle. And so that when you get these large spikes up, a large green candle means that the bulls were absolutely dominant and were able to overcome any kind of fight that the bears put up and move it to higher ground. The opposite is true for a long red candle. The bears dominated the market without the bulls having the ability to really do anything about it. A doji, however, is a consolidation candle in which it can either be a pivot point just prior to a market going through some sort of key reversal. You kind of get that here and here. You see these dojis. It's trying to form this base. You get these lows. And so then you get that strategic V. The V is always what we look for, which is that pivot point right here. In terms of a buy and a sell is the opposite. Market comes down and we look for this pivot point right here. Well, one of the best illustrations of that pivot point is a doji, because that is a day in which neither the bulls nor the bears are able to dominate the market and control the market, and that's what you get. So you can see scenarios where the doji is quite adept at really indicating that key reversal area. However, I must caution you, because there is another way that dojis kind of unfold, and we've talked about this before, and that is simply put, as a market moves up, for example, like right here, you get these series of dojis that, rather than being key pivot points, are simply what I call consolidation or rest stops. And so the market is kind of consolidating prior to returning to the overall direction of the market, and then in this case moving to higher ground. I believe that we'll see this market could in fact move a little bit higher, but I do think we're going to see some selling come into the market, even if the market's still overall bullish. We've had an extreme run when you consider that we were trading at just about 1980 in terms of the Standard & Poor's. This is a daily chart, so you're looking at a time period of under 2 weeks. So that's a considerable move, to say the least. Oil, which had a dramatic rise yesterday, I believe up about 4%, has pretty much given that back in today's trading range, off by 3.5%, $1.67 lower per barrel, 45.13 on the day. So traders, you know that I have been on record looking for oil prices to withdraw and actually come down, especially after hitting about 50. I thought 50 would be the top. That was my original assumption. I was off by about $2. Market actually topped off at $52 a barrel. And considering the fact that that's $52 after hitting that drop to 26, that's been a tremendously a strong move in the market, to say the least. Now, from there, obviously, we've gotten some sort of a retracement here. But what I draw your attention to, and we've been looking at crude oil through these channel lines because they've been really effective tools in letting us see how this market's trading. Now, this is a fairly long channel line. And one of the things you see is we don't really touch the bottom on this channel line. We go to the midpoint on many occasions. We do hit the top, but we absolutely broke through this channel the other day. And that was, of course, late last week. But then, of course, we had this tremendous rebound yesterday on Tuesday, in which we saw, about a 4+% gain, and then all of that taken back today. Now, what does that tell me? What that tells me is that if we want to plot on a technical basis our current level of resistance, we really can use this bottom channel line to do that. And you can see that as this market came up, it hit the bottom of the channel. That was resistance, then opened and traded lower. So we absolutely have some resistance here. I'm going to stand pat, and I have been talking about oil in terms of a range where I think oil is going to go. And this isn't new. I've been looking at this price point for the last couple of weeks at least, but that's between $42 and $44 per barrel. I'm going to still hold by that. I think that if we do achieve this marker right in here, I think we might even see a little bit of range-bound action. We haven't seen a lot of that. The one thing that can be said about crude oil is we've had effective and dynamic sell-offs, decent rallies as W here, and then a tremendous spike from 26 up to 52 dollars per barrel. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow for another Trending Markets. Bye-bye.